Good afternoon and welcome to the latest Yellowstone Advisory webinar with John Burrows, CEO of Oxford Biodynamics, and Matthew Wakefield, the new chair, who will present the half-year results released this morning.
Thanks, Alex. I'm unmuted, and unfortunately for those there, you can probably see me as well. Thanks everyone for all your time today. As Alex said, this is very much an update on the strategic review and what we've been doing over the last 6 months that we had in January. May I suggest to those people who aren't shareholders and are new to the company, you can go onto YouTube and have a look at the previous presentation we did in January to give you a bit more background. For those who've read the interim statement today, you probably surmised it was very comprehensive and there was a lot in it. And we've shown we're honing down the strategy going forward to next year. And I think it's probably wise for me to hand over to John because there's quite a lot to go through and quite a lot of nuances to what was in the announcement and where we're going. So John, over to you.
Thank you, Matthew. Good afternoon, everybody, and thank you for being on. I'm going to spend about 20-30 minutes going over and setting the scene for what our pivot to commercialization since the end of last year really means to us and how we have recast the company so that we can move on and take the treasure trove of useful clinical applications that we have and really start bringing them to the US market. As you can see on this opening slide, where we play is in here, in the chromosome architecture. The genes are all balled up in here. And what we've been able to do is decode that and be able to interrogate what's going on in these gene loops. And we've put that into an industrial workflow, which is now we're able to make available to clinicians and pharma researchers. So skipping past the disclaimer, just as background, what we're doing is we're moving away from R&D into the commercial market for 3D genomics worldwide. And we're focusing on the US market because that's where you need to be able to demonstrate that you can commercialize and you can get traction. We're focusing on 3D genomics because it's crucial in gene regulation and it's been overlooked with the NGS revolution that we've seen in the last several decades. Those of you that have been following us for many years now know that we've created a valuable technology portfolio with our knowledge base, with our biomarker arrays, with our informatic tools, and we have a pipeline of deployable tests, which the CST test, which I'll talk about a little bit in a minute, was our initial market entry in Q1. This is all also protected by a substantial patent estate. And this is very important because what it does is it gives us freedom to operate in the market while we build that market. And that is what we're doing. There's no 3D genomics commercial market out there right now. So as leaders in biomarker discovery, for gene regulation, for precision medicine, and with the proven expertise to translate and reduce all of what we do to practice for clinical applications for physicians, we are now in a position to grow, which we've started to do in 2021, into a commercial entity. And you will have seen from the interims and the statement that I made that there's a lot to come in 22 and 23 as well. So to begin commercializing, we're partnering with US labs. We're establishing that adopter market and the understanding of what we do and how it contributes to better and new information for the clinical market in the US, which we can then use to knock on to other markets. And we're setting the table for the clinical utility and market recognition that we will need to command the value in terms of pricing, volume, and coverage for our tests in the US market to demonstrate to the rest of the world that this is something that they need too. In a nutshell, you can see that we launched our COVID severity test in Q1. We also launched our array kit in conjunction with our supply agreement with Agilent, and that's for academic and pharma researchers. We're following this up very quickly with everything that we've learned from these launches with the IO test in the second half of this year. And we continue to work with pharma in the clinical development and biomarker discovery. And what I really wanted to talk about in that vein was when we expanded our strategy into other commercial sales channels in commercial with the testing and with the kits, we didn't leave behind the pharma. This was an expansion. Pharma basically went into a little bit of a cocoon for the last 15 months through COVID. We were lucky to be able to continue to work with our major pharma collaborator on the MSA we had, and we've kept working on that throughout the last 15 months. We've run almost 500 samples with them and analyzed them and helped them understand how the data and information they get from them help shape the future pipeline and the direction of some of the drugs they're working on. What we're seeing today in the last month or so is that pharma is starting to see that they understand how to work now that we're this far through the pandemic. It's not over, but they're coming back now and actually talking to us. And that's been very good to see. We had an inquiry from GSK a few weeks ago. And as you know, GSK has just got on the market with their IO drug, their checkpoint inhibitor called Jemperli, and they're starting out to market this. We're having conversations with them about how our immune health knowledge, our ability to look at responders and non-responders and look at the underpinning physiological insights to that can help them going forward. They're not the only ones that have come to talk to us. You know from our poster at SITC in 2019 that we'd been working with EMD, Serono, Merck KGaA, Pfizer, Mayo, etc. And while everybody had pulled their horns in and was getting through the pandemic, now what we're seeing is a thawing of that. And as we come out of lockdown, even though people are being cautious, people are understanding that they need to keep moving forward and that our innovative technology is indeed something that can help them differentiate and learn more about their drug developments in a way that the traditional NGS genomic sequencing can't always help them with. EMD Serono have come back to us to continue to finish up a publication that we've been working with them on and talk about what else we can do in the future. Just to remind everybody what we do that's different and why this is important to the market and how we can monetize this commercially, but also bring value to the decision-making that needs to be made both inside pharma with clinical development pipelines and by physicians when they have patients come to them with a variety of different ills. What we can do is we decode the 3D genome that regulates your genes. We have been able to use our array with the million most important points of that regulation to map 30 different diseases and what's going on with them, so that now we are able to build and deploy very powerful molecular tests. And this has led to a very mature end-to-end industrial workflow in 3D genomics, which doesn't exist anywhere else. This is reduced to practice and proven in many ways now. And we can go from whole blood that's taken out of your arm at room temperature, go through our proprietary prep, and do the biomarker discovery, product development, and build the commercial products very, very well and very quickly. This is something that the market is ready for. And from the interactions that we've been having as we entered the market with our tests in Q1, the conversation has really changed. The page has turned. You can see all of these range of clinical applications that are in our product pipeline today that have come out of this. And if you put them into what we are moving forward with, what has happened to us since we committed to commercialization is that we've had companies, investment companies, pharma companies, etc., come and start talking to us about, oh, who are you? What do you do? How do you do it? How does it add value? And this is a completely different type of conversation and attention than we've been able to get before. So with the CST test as our market entry, what we've been able to do is go through all of the steps that you need to successfully put an operation in progress in a US partner lab. And what we've come across are obstacles and challenges in doing that. But what's great about that is that the team, as we're building it and as they react to these challenges, are learning what it takes today, in this day and age, to go ahead and bring any test into the US market. And that's been very, very important for us. We also have, shouldn't discount the fact that our collaboration and supply agreement with Agilent on the array kit shows that there are large multinational companies that get what we do, that see the value of getting more and more of this out into the hands of researchers, whether they're academic or whether they're in pharma. And we've had the initial orders coming through from big academic groups, starting with obviously the group in Oxford, and actually a second group there, where we've gone through becoming a preferred vendor for the kits, getting the attention of those types of institutions. And now what we're seeing is we're seeing researchers start to write the use of our kits into their grants. And that's important because they need to pay for the kits, and that's how they get the grant money to be able to pay for those kits. And that's going to have a knock-on effect. We have also really taken a very, very long look at what does the rest of our portfolio look like? What are the other opportunities? How do we go ahead and identify what the unmet needs and gaps are in the markets that we can address? And how can we go ahead and find the ones that are the most lucrative and will make us most successful as a company? And if you look at this, when you look at the prostate test, you know, PSA has been around for a long time. It's a $40 test that most physicians will run, and they'll run it because it will be reimbursed and they can go ahead and look at the data and either use it or not use it. And it's mostly disregarded these days because it's not very accurate. Now, what we've seen other companies come in with molecular testing to try and fill that gap. And what we understand is that there's part of that market that's very important to us because nobody has captured any of these markets beyond 5 or 6% penetration. What's important for us around, let's say, our prostate test is that not only can we look in a liquid biopsy in a non-invasive way, that is your blood, and tell you, do you have prostate cancer or do you actually have an enlarged prostate? And not only that, though, we can prognosticate with the prognostic part of our test. what stage are you at? Where are you? And that's very useful information. It's not just, oh, you have this. It's, this is where you are. This is what can possibly be done for you. Similar thing with the colorectal or the bowel cancer. There are some successful tests out there. The main one on the market, you actually have to, and excuse my French, but you have to poop in a box and send it somewhere. People don't really like doing that. If you can get a blood test which tells you that you do or you don't need a colonoscopy, that you are at risk or not at risk for colorectal cancer, or look, it looks like you have a problem here and it's showing up that you're colorectal cancer positive, but where are you? These are the sorts of things that our technology can help us bring to the information set that doctors and pharma companies need. The third thing on here, which is quite important, is veterinary medicine. You know, there are a lot of people that have companion animals. In the US, there are 90 million dogs alone. There are also 30,000 vets. What we have is we have built, based actually on our human lymphoma test, which is down here, a test which has crossed from human to canine, which can tell the same things. Does this dog have lymphoma? And that's really important because dogs often show up with swollen lymph glands, et cetera, et cetera. You don't know why. A lot of the time it's nothing. If you have a very simple blood test, you can tell as early as possible what's going on with your pet and make that intervention. Because our tests are prognostic, what you can also do is you can determine, are they most likely to respond to the chemotherapy they're given or not? What are the other options for these animals? That's a massive market. It's a place where we don't have any expertise. It's a place that we've identified as a board and a management team where we need to go and find a partner, where we need to get into a collaboration, whether it's a joint venture, a licensing deal, whatever that is, and bring this to the market. There are many fronts that we're playing on. And what I like to say to people is, you know, you could become just an oncology company. And if you think about it, look at our pipeline: prostate cancer, bowel cancer, lymphoma, breast cancer, melanoma, lung cancer. We could do that. But what our company is actually doing is looking at the questions that doctors and patients get faced with across the diseases that are most prevalent in our society. And can we answer them? Can we bring something to the table that helps them determine what's best for them going forward? On this next slide, what I'm really trying to tell you is all this is protected. And that is very important because our international IP portfolio allows us, because of the way that we have layered it, and because we have the trade secrets, the know-how, the brand name and trademark tied up, to have the freedom to operate and the time to build this 3D genomics market. We have an experienced team that's leading the company's commercialization at this point. And I have to tell you that Dr. Akulichev, or Sasha, as we all know him, you know, his expertise as a researcher and how that has pushed forward into product development is a massive step for the company. And the ability for Tom Gill, who came on in October as our COO, came on as a consultant in October and then became our COO, to bring his knowledge of how to do the operations and logistics with partner labs, how to make the Anglo-American operations from Oxford into the US flow properly so that things continue to grow, has been amazing for the company. And we're going to continue to grow our resources and workforce to support the ongoing R&D we're doing, the product development that we're doing, and the commercial lifts that we need to do. And I'm going back to this slide really quickly because something that you won't have seen, with this colorectal testing ability that is reduced to practice to PCR today, since last year, that's actually new on here. And that just shows you how quickly we can move forward through things. So I'll just talk about the tests really quickly as we go through this, because I think...
John, could I just interrupt for a second?
Yeah, sure.
I just thought one thing you might add, Tom's role in the firm, which has obviously been very important, and how he's not a random employment on your behalf. You worked with Tom before and built up Oncoplex together, and how you're going to replicate. You had trodden this path before. I think a lot of people would like reassurance on that.
Yeah, and it's true. Tom and I have worked together when I was at Oncoplex, and we've been in this area together for over a decade. Now, I will tell you as we go forward that Tom's expertise is not just in the operations side and the logistics, and even partially the marketing and those things, but the reimbursement side as well. And what's important here is to understand that we're looking at the portfolio as a whole in terms of how can we monetize it going forward, and what's the best way to do that. So let me explain a couple of things, and I think what I need to do though, jump a slide. So if you'll indulge me really quickly, I will jump a slide to, let's go where, okay, it's there. I want to talk about this slide, and then I want to tell you what Tom's up to and what we're up to with this, because it's very important. So we've told you about all these different tests that we can bring to the table. But with the CST test, what we did was we went out and we understood that there was no market, there were no codes, there was no basis for that test. However, the concierge medicine doctors who see at-risk patients, the patients who are vulnerable, who are immunocompromised, or who haven't, even if they're vaccinated, mounted a very good antibody reaction to it, need still, even today, and especially with the variants around, to know where they stand. If they were going to be infected, are they possibly going to be a severe case? And the reason we went there was because the concierge medicine doctors have access to that, plus those tests get paid for directly without having to go through insurance or the payers. Now, if you look at the other tests we're bringing on, IO, prostate, colorectal, what you need to do is you need to get reimbursement. And the first thing that a clinician asks when you present them with a new test is, how does it work? Have you published on it? Oh, and who's going to pay for it? And so you get to the point where they need to know someone's going to pay for it before they will start using it. Let's talk about the IO test. Immuno-oncology, there's two different types of testing out there right now. There's immunohistochemistry, which has codes and is billed for at the level of about $200 per test. And there's tumor mutational burden, where there's a test out there that is a multiplex genomic test. It's a molecular test, similar to our type of molecular test in a way. And it is reimbursed to the tune of between $1,000 and $3,500. And it's all due to codes. Now, the fact that there are existing codes for the types of tests that we have, this is where Tom and myself, but mostly Tom, are talking to the payers today in terms of our IO test, to find out what are the recommended billing codes that actually exist that we can use when we launch, so the test will get paid for. The physician will order the test, test will be administered, the report will be given, and then they will use the billing code for that test to be billed for. That's what we have to do proactively ahead of the market. We have to do this with all of these. And we also have to look at coverage policies. There are national and local coverage determining policies, which we can be amended into initially, and we can even go and have our own later on. The reason why it's as important for us, Tom and I and the rest of the team that I've worked with before, to do this together is that we've been through this story before. We understand what's needed. I will tell you anecdotally that back when we were running OncoPlex, there weren't codes for multiplex molecular tests. And so we had to stack codes in order to get the value for the billings. However, you're not allowed to stack anymore. But on the other hand, there are codes that you can piggyback on. And this all helps us with how we penetrate the market and build our ongoing clinical use and clinical utility cases to enable us to either go after unique codes that have greater value, to get contracts with some of the payer organizations that you see at the top to cover the people that they cover, and to really have it in the context of real world pricing. What I would say then is that the outlook for the company is very bright. It's a very large lift, but it's not something that we're not up to. It's a big task, but we've made considerable progress, and we're on our way to commercial and operational traction as well as meaningful revenues going forward. And I think I'll stop there and I can entertain questions. So, Matthew, were there any other comments that you thought would be useful at this point?
No, I think you covered it most. I think one of the essential things is, that we had done a thorough review of all the potential tests we've got, and we're not going to stretch ourselves too far. And that's why, we are in discussions on the canine lymphoma test. And, that could be a useful, very short-term monetization of one of our products. And I believe the market will actually would like to see that. And the other important thing about that is it does show that how fundamental our technology is. It works across species. This is really at the core of what we do. But I think you covered it all pretty well, John.
Yeah. So before I finish, just picking up on that really quickly with this slide for everybody, we have looked at the market in detail, and you can see from this slide, there's an upsurge in veterinary medicine applications and companies wanting to pull products into their pipeline right now. And so that is one place where we definitely see action can be taken relatively quickly within this year's time frame. And it's a really good place for us to be. So with that, Alex, I will stop now.
Brilliant. Well, look, thank you, Matthew. Thank you, John, for that run through of the results, and also, I guess, laying the foundations, or telling us about the foundations that you've laid for future growth in the company. We are now going to go to Q&A, and just as a reminder, if you want to ask a question, please just type it into the Q&A box at the bottom of your screen, and we'll try and cover as many questions as we can in the time available. I'm going to start with one that was sent in ahead of time, John. And the question is really about the strategy pivot. And it says, historically, the main focus of the company has been to work with pharma companies on the biomarker projects and capture value in third-party validation of the EpiSwitch technology through licensing, milestones, and royalty payments. Can you elaborate on why this strategy did not lead to major licensing deals and corresponding revenue growth so far?
Yes, I think that strategy is not off the table, but it is a long-term strategy. And while that working with pharma is definitely very useful, pharma in their development cycle, it's a very long cycle. So there's two things that happen, and that is that if you can work with pharma while they're developing a drug, and those contracts are hundreds of thousands, 500,000, maybe $1 million over time. Where you get a licensing deal or a milestone type deal is more around the companion diagnostics. Now, companion diagnostics take years to develop. They can command, development of a companion diagnostic can command $15 to $25 million. And there can be milestones and et cetera on the back end of it. But what's going on there is that you are tied to the timeline of the pharma, and you're also tied to the success of the development program. Now, when I worked at Ventana Medical, which is where I started doing business development, we worked with all the top 20 pharma and biopharma, and we would work on a particular assay type companion, and we never knew whose drug was actually going to make it to the market. So what we were doing was working with multiples, right, to try and ensure that we were actually working with someone who got onto the market. So it's a difficult place to actually, especially as a small company, to spread yourself out and to wait. So what we did then was we said to ourselves, well, we have the ability to keep doing that. And of course, in COVID, all of that went into a hiatus. But we also have the ability to add the other channels through commercial, not just activating the academics, whether they're at an institution, university, or biopharma, but also bringing these tests so they get into the hands of the end user for us, which is the clinician, but also pharma can use them. But not only that, pharma can see our commitment to building tests like that and their ability to be able to get all of the information that went into building it in those physiological insights along the way. Now, the vet med situation that we've just described is actually a classic where it really could be a licensing deal. That could very much be a situation where a company could see this product or set of products, because we can expand this out into the leukemias and the sarcomas as separate tests, but within the same immune matrix for companion animals. And that in itself would be an acceleration, if you like, because instead of doing it ourselves and waiting for a pharma to get a drug on the market, we can make a deal with an existing animal care company that needs product in their pipeline. What I didn't mention was that if you were to go ahead and sell a test into the vet med market for a few $100s, the size of that market is such, and the need is such, that you can generate very, very good revenues. And an upfront licensing deal with a royalty stream on the back end would be a very nice thing for our company to show that we have value and to also fund us going forward.
Okay, thank you. I'm going to move on to the question about, there's been a recent pivot in strategy, and the question says that seems like a sensible and promising move. However, how will OBD differentiate itself in this diagnostic market when there are lots of other players there already? And the specific example is given about prostate cancer. You're trying to move into this area. There's a company out there already, MDX Health, which is doing specifically this, and its sole focus is on capturing the full prostate cancer screening. You know, how can OBD compete against them in this market with your resources?
It's a fantastic question, and it's something that we have considered in a lot of detail. And I will say to you that the differentiation for our test is first of all, that it is a simple blood test that can screen you and tell you where you are. Are you, let's call it, healthy? Do you have it's called BPH, benign prostate hyperplasia, but it's an inflammation of the prostate that happens, and it's not cancer? Or do you have prostate cancer? And if you do, where are you with it? This type of blood test really will help the urologists that work with patients figure out very quickly how to stage their patient. The other thing about this is, let's say there is another test on the market. I see that as a good thing, and I'll tell you why. First of all, they've already established a price point. That MDX code is worth several $1,000s. There are 45 million men over the age of 50 in the US alone who are who need prostate tests yearly. Now, if you take 10%, let's just take 1%. Let's actually just take 1/10 of 1% of that's 45,000 people. One of the reasons why there's room in the market is because not only is there a test that can give as good or better information from a liquid biopsy, but try and capture 0.5%. It's 250,000 tests. Who's got that capacity? We would love to build into that capacity. There's, just switching gears really quickly, there's a colorectal test out there by Exact Biosciences. They ran 1.6 million tests in the colorectal market last year. They made hundreds of millions of dollars in gross revenue. But the point is that was only 6% of the market. There's room in these markets, and there's a need for more testing and as good or better testing. So that's what we're about.
Thank you, John. Switching gears a little bit to a question about the listing. What is the board of directors' opinion on AIM being the right market for OBD, and are there any ongoing plans to list on US markets in the near future?
You know, that's a really, really good question. And the first thing I can say is that we've been on the AIM market now for over 5 years. And when we first came on the market, what we said was we were going to commercialize. We're making that happen today. And the AIM market has been good for us in lots and lots and lots of ways. We don't right now have any plans to do anything different, but we are continually looking as a board and a management at strategic and financial aspects. We're looking at a view to what's best for our shareholder interests. Is there a test that we can go out and license to somebody? Are there pharma contracts that can come in and help fund us forward? The fact that we're in the US does mean, though, that we're getting substantial interest from people in the US. And that's, like I said a little previously, we've committed to commercialization, and we've committed to it in the US to begin with. And people have, I had a conversation with an institution in the US who basically called me up and said, now that you have launched your market entry test, now that you have a kit that enables people, we've been watching you for a long time. We want to know who you are, what you're up to. how the future is looking for you. And we're in those conversations. So I can't really comment much further than to say whatever's best for the company and all the shareholders in general is what we've got an eye on.
Okay.
John, do you want me to add a bit, Alex?
Yeah.
Because obviously I feel greatly responsible because with my broking hat on, I raised most of the money for the IPO in December 2016. And obviously it hurts me to see the share price at an all-time low. Is AIM the right market for OBD? It certainly seemed like that, but I think when you look back over the last few years of what's happened to AIM, especially biotech stocks, you know, we had the Neil Woodford situation, and the fact that the UK seems to, over the years, has steered away constantly from pre-revenue companies with great hope, great technology, as we all know, those companies are treated much better in America than they are in the UK. But the one thing I can give, and I can understand why I'm a shareholder in OBD, and I can understand the frustration people feel seeing the share price where it is. But having been associated with the company for over a decade, all I can say is that in the last year, and you know, I've been chairman since December, I've seen more happening underneath the bonnet than I've seen since the IPO. And that's not to say anything wrong has been done. When I say underneath the bonnet, it's more towards this nirvana of commercializing what is brilliant, proven technology. And you know, in my experience, the biggest risk is usually on the technology or on a drug or a molecule. Does it work or does it not work? You know, we've got through that stage. The next biggest risk is commercialization. And, you know, we are literally on the edge of the cliff on getting towards that commercialization. And you know, there obviously has been a lot of interest from Americans because, you know, we are in the US market. We have got a very loyal institutional shareholder base, and we're seeing all those this week.
Thank you, Matthew. I think you've preempted the next question, but I am going to mention it because it's sort of been asked by 5 different people, and really the questions around, look, it's a really good story, but the shares are almost at an all-time low. And I guess since the Agilent RNS, the shares have fallen 50%. And I guess the question is, if grouping these questions together, you know, what are the board doing about that and how can you do it? And there's a slight sort of follow-on question, which is, you know, there is a bit of a concern that whilst you've got great technology, it simply fails to get, you know, commercially or commercialized successfully. You know, what comfort can you give to investors that actually that's not going to be the case here at OBD?
I'll just put my little bit in, but you know, it is. I've been an investor in many markets for a long time. It's the old Betamax VHS dilemma, isn't it? It's you know, all I can say is I think those lack of commercialization arguments were probably more valid last year. But John has done this before. I've been working with John now for 9 months. He's like a dog with a bone, if I can say that, John. You know, he's done it before. And I truly believe he's going to do it again. That's the strategy which we approved of the board going forward. I think is completely and utterly correct. And yeah, as I say, it is frustrating to see the shares where they are. It you know, keeps me up at night. But the fact is, I can actually look to the uplands and see that, you know, we are really right on the edge of it. And you know, all we can do as a company and as a board, as managers, is to actually make sure that we do this properly, which we are doing, and I just know the share price will follow.
Yeah, I think I'll pick up on one part of that, which is concern that it fails to get commercial. That failure to commercialize is what would have killed this company. I think that's a massive point. So going out there and commercializing and putting the tests out getting the technology, its recognition, having people understand that this is a complementary mode that adds information to what NGS is doing. And what I've seen in Q1, look, there are no promises, right? These are markets that are driven by things that are beyond our control. But what we can control, we are controlling, okay? And I think what's important is that we made those statements in December to the market where we said, we're going to pivot, we're going to start commercializing, here's the product line that we're going to go with. We've started that, we're right in the right place for it. We turned the page at the end of Q1 in lots of ways. I saw in my conversations and the way that people were coming to get information about us and were open to understanding what we're doing and how it adds value, that we are actually getting the attention that I would expect to see to be successful. We're chasing meaningful revenue and traction. But look, that's what all small companies have to do. If you go back to the genesis of the NGS market, the companies that started going there, the Foundation Medicines, which we have to say thank you to actually, because they generated the molecular testing codes for multiplex analytes, which we will start to use. They fought that battle when they were little and got there. There are lots of others. Oncotype DX, right? NanoString. They've all had to go through this. And this is sort of it's essential that we go through this. And back in 18 and 19, we hadn't done it yet. And that, if we had failed to do it, I think we would have been in dire straits. The fact that we've gone and done it and we're getting that market recognition, which we still have to capitalize on, is a very, very good sign to me as the CEO. And this is something that is hard to do, but call me a masochist. I like doing it. I like the challenge. And I have to tell you, we're not a one-trick pony. We've got everything we need in place. We've just got to execute. That's what we're about.
Thank you, John. Taking another question on a slightly different tack and being more specific here, is there any downside to the rather good sounding property deal with the cash return that you struck? And maybe you could remind investors on this call about that deal.
Yeah, that's actually, I see a lot of upside there, but let me just tell you about the deal. So we had been operating, or we still are, in about 6,500, 7,000 square feet. And that's office and lab space. Now, under COVID, we've only been able to have 10 people max in that building at any one time to keep things going. So we've had to keep rotating people out. What we understood was, even as COVID got going, that we were out of space for all the things that we need to do going forward. So we went to look for a space that would accommodate the continuing R&D that we need to do, as evidenced by what we've done with colorectal. Brought that through the R&D, the product development that we need to do, and then the support of our commercial. And people have said this to me. They've said, John, well, if you're going to go with a partner lab for commercial, why do you need anything commercial in your own lab? And the idea here is we do, because you have to support your tests. Your tests go through 1.0, 2.0, 3.0. They go through a progression. I'll give you an idea of what the progression is for the CST. When we started doing the CST test, we were using frozen blood. Frozen blood is a barrier to the market. People don't want to have to freeze it. They don't want to have to keep it cool. They don't want to ship it on ice. So we went back to previous work that we'd done, and we very quickly, while we were developing the test, made sure that we could use room temperature blood. Those are the sorts of things that you have to do. Now, the reason I'm explaining it in so much detail is because the 22,000 square feet that we're building out right now will accommodate all of that. And to be successful, we need that in the UK. We actually need beyond that in the US. What we need in the US are more partner labs coming in with us. And eventually, if we want to control our own destiny, like we've started to do, our own testing capacity, but that's down the road, right? So the deal that we had with the landlord was that because we're doing such a large fit out, and because we are going to be there in a growth phase, that we would get $2.5 million up front to help us fund all of that. The landlord makes that back over time. But what it does for us is it shows the support that even the people in the know in the UK Science Park have for us. And it underpins what we're doing as a company that needs to grow in order to follow up with its promise of going commercial and maintaining a portfolio of launch tests that this year will be 2, next year will be 2 more, and on and on and on. So I hope that answers the question. Matthew, I don't know if you've got any insights on that.
No, I think that covers it. I think it's another sign that, you know, how entrepreneurial we are in the sense that we got this deal, and it's actually, you know, it's exactly what we need also to grow the company. You know, we're you know, I give hundreds of examples. You know, we've mentioned Tom, etc., how he managed to source 3 reconditioned robotic arms, and you cannot buy these things in the market now. John will tell you, the UK government commandeered all the UK ones, and in America, you can't get these things. They're on, you know, 1 year waiting list. Tom is so experienced. He said he could foresee this happening, and you know, we got these reconditioned ones. You know, things like that. We're all, you know, we are always entrepreneurial. We're always on the lookout, and because we are gearing up for this stuff to become very commercial.
This isn't a question, but I'll read it out, and you may wish to comment on it. If you're in the US market breaking in, it will be very expensive, and you'll have to find a backer with courage to commit large amounts of working capital to get the product out. Don't be frightened about dilution.
Well, I understand about the dilution, even personally myself, right? But here's the thing that's important here, is there are lots of ways to do this financially. We've already talked about one of the reasons why we want to move into these larger markets. You know, let's just say that you have a test which can command a billing code in the molecular area of the molecular testing. And we know that those codes cover $1,000 to $3,500. Let's just say that we can sell an IO test for $1,000. At the bottom level, as we break in and we push out the market, right? How many tests do we have to run? If we run 10,000 tests, we're getting significant revenue in. When we launch something like a prostate test, because that market's so big, and if you look at the average selling prices in the market today, $500 is about the right price for a test like that. It could be even more if it gets coded and as a molecular test with a lot of value. But $500, 0.1% of the market, 45,000 tests, you're generating cash to be able to sustain what you're doing. You're also generating cash to be able to shore up and take on other financial commitments. So I don't know, Matthew, how you'd answer that, but I think there is a lot you can do rather than just being diluted to go forward. Unfortunately, we're in a place where while we're growing, we also have a stock price that's jumping up and down. And that's, you know, if we were in a situation where we could just grow, I don't know, it's a difficult one. Matthew, help me out here.
Well, I don't think you need much help, John. I understand completely the comment. It's not a question, as you say, Alex. You know, if it's the same old dilemma, if you need 100 million quid to get one of these tests onto the market, well, I'm just making numbers up completely. You shouldn't be afraid of dilution. You know, I totally get that argument. But the interesting thing is that, you know, we've done all the work on these tests already. They're just sitting there to be plucked as and when. And it's not capital intensive to bring these things onto the market. Where I will be picked up is it's basically getting the message out, which is, and even these days, it's so much cheaper getting that message out if you're picking the right counterparties. I will give this a little, again, anecdotal story. John, forgive me because you told me this, but John was giving a presentation on the CST test to a very senior person at a concierge medicine outfit. And this guy at the end of the presentation said, well, tell me a bit more about OBD. And he's an oncology expert. And John went through this similar presentation to this. And he said, what's this immuno-oncology test? And John described it. He said, why on earth haven't I heard about this? That is brilliant. I want to do something with you guys. Give me an option deal. I'll sell this to all the top oncologists in the country. You know, that is the way these things work now. So I do think it is possible without any dilution to do this. We can. All we need is one of these things to take off in a marginal way, and you can fund a lot of the others.
Brilliant, John and Matthew. That brings us to the end of today's webinar. I want to thank everyone for attending, and also to let people know that there will be a recording of this available on the Yellowstone Advisory YouTube channel. And just to flag up a couple of webinars which are coming up over the coming weeks. We've got castings on the 21st. They have their results tomorrow. Going into July, we have Belvoir, British Land, and Crossroads Cybersecurity, and details of all of those are on the Yellowstone Advisory website. And as you leave the webinar today, you'll be asked to fill out a short feedback survey. It'd be really appreciated if you could do that. So many thanks again for attending, and look forward to seeing you all soon.